I guess the Fed claims credit too, because the Fed is, an architect of this great economy. There may be something even going on in China. The price of gold in China is actually, rising. So the Chinese are buying gold, so something's going on.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar. So,
as expected, the Federal Reserve left the Fed funds rate unchanged in September at 5.25 to 5.5. Now, Powell did indicate that there is an expectation of one additional hike. And that's basically all the Fed expects. So maybe 5.5 to 5.75, and then they're done. Which means they're really done right now. Because even if you raise rates by another 25 basis points, after having gone from 0 to 525, what difference is one more 25 basis point hike going to do? And if they haven't done the job now, if 5.25 isn't enough to bring inflation back down to 2%, which it's not, but if that's not enough, then 5.5 isn't going to do the trick. And if 5.25 is enough to do it, then what difference does an extra rate hike mean? I mean, it's practically the same thing. It's not like people are going to change their behavior dramatically because the Fed funds rate is 5.5 versus 5.25. It's too small a difference to be meaningful. And so this really signifies the end of the hiking cycle, at least to the extent that the markets are anticipating. So I would imagine that we would start to see sell-off in the dollar, a rally in gold. We didn't really see that today. It was actually very quiet in the foreign exchange markets, and gold did finish the day slightly positive off its highs. It was up maybe $12 an ounce before we got the decision, but the markets kind of sold off late in the day, and I'll get to the market reaction after I finish talking about what happened. But I do expect there to be some type of move now in the gold market, and there may be something even going on in China. I've been reading stuff, and I've noticed that the price of gold in China is actually, rising. You can actually, if you can arb it, you can actually get more money. Gold is selling at a premium right now in China than it is pretty much everywhere else. So the Chinese are buying gold, so something's going on that's causing them to buy more gold than normal, which is pushing up the price of gold in the Chinese market higher than the global market. So that could be indicative of something that's going on. I just don't know what it is, but whatever it is resulting in more buying of gold in China. But anyway, so getting back to this rate hike, when they announced it, it was pretty much, we're leaving rates unchanged. We're still a long way from our goal of getting inflation back down to 2%, but we're committed to doing it, and we're going to do it. Really nothing new. Powell did mention that the Fed still intends to continue significantly reducing the size of its balance sheet, meaning that there is no let-up in quantitative tightening. And so even though the Fed didn't raise rates and may only raise rates one more time by 25 basis points, they're going to continue to tighten via the balance sheet by shrinking the balance sheet. And of course, that is a huge problem. And this problem was not really acknowledged at all during this press conference that followed the announcement that rates would stay the same. Between the last podcast and the one that we just did, as I expected on my last podcast, the national debt moved through 33 trillion. So we now have a national debt in excess of 33 trillion. What's significant about this is that we just hit 32 trillion on September 15th. So it's been 3 months, and I think it was yesterday, so maybe 3 months and 4 days. That's all it took to add $1 trillion. Now, outside of the pandemic collapse, and I'm not even sure, maybe this is even bigger than the pandemic, but I don't know that we've ever had a single 3-month period. I mean, that's basically one quarter, where $1 trillion is added to the national debt. That is a huge number. I mean, we're not even in recession yet. I mean, one of the things I'm going to talk about is Powell kept talking about the strength of the economy, how strong the economy is, how unexpectedly strong it is. Yet this unexpectedly strong economy is hemorrhaging red ink. $1 trillion in the last quarter. The national debt didn't even hit $1 trillion until sometime in 1980 when Ronald Reagan, was elected. 1980. So that means it took the first 40 presidents 190 years to run up $1 trillion in debt. Yet President Biden ran up the last trillion in just over 3 months. That tells you how big this crisis is. Yet not once during this press conference was the national debt even mentioned. Government spending mentioned. Powell's doing a press conference on inflation, and the main source of inflation is government debt that the Fed monetizes. Yet the topic of the out-of-control debt and all the monetization doesn't even come up. I mean, how do you even have a press conference to discuss inflation and you ignore the elephant in the room, right? Well, that's exactly what happened during the entire conference. And by the way, everybody is excited to listen to what Powell has to say on these press conferences. It's not because the guy knows anything. It's not like Powell has some kind of special knowledge about the economy or inflation that the rest of us don't have. And we have to kind of sit back and wait to get the inside scoop from Powell, right? He's like the Wizard of Oz. He's all knowing. And, us ordinary folks, we don't know because he's, like this super economist, because after all, he's the chairman of the Federal Reserve. I mean, he must be the best out there. Otherwise, why else would we have picked him, right? He must be this super genius about the economy. And plus, he's got all these people working for him. He gets all this data. And so surely he, possesses some special knowledge that just ordinary economists aren't going to have, right? Well, no, that's not it. I don't think most traders believe that Powell has any idea. The reason they care about what he says is because they want to figure out how to position their trades. Because it's not about what's actually going to happen. It's about what Powell thinks is going to happen. That's what people care about. What does the Fed think is going to happen? And then they can decide, well, if the Fed thinks this, what are they likely to do? And Powell actually talks about what he's likely to do. Now, maybe it's just a bluff, but it doesn't really matter to the markets because traders react to what the Fed says and what the Fed claims they're going to do. So it's not because he knows what he's talking about. It's just because everybody wants to know what he's thinking about doing or what he's pretending that he's going to do, because that is important for short-term traders. So that's all it's about. It's not about actually knowing, like, oh, Powell's going to tell us what the inflation rate's going to be next year or what the GDP rate's going to be. He has no clue. He's just guessing, right? In fact, his guess is probably worse than a random guess because it's heavily biased based on the politics. And that's one of the reasons he keeps talking about how strong this economy is, because it's Joe Biden's economy. He's trying to validate Bidenomics, so his marching orders are talk about how great this economy is. That way, Joe Biden, who renominated him, right, so he's going to do exactly what that guy wanted. He wants to, put a nice bow on this economy and present it as if it's strong and everything is good, so Biden can claim credit for it. Of course, I guess the Fed claims credit too, because the Fed is, an architect of this great economy. And so Powell can also claim credit for fighting inflation, but doing it in a way that hasn't really damaged the economy. And then, of course, the rates are going to be cut. Everybody expects that rates are going to be cut in 2024, especially since it's an election year. So you might expect that Biden is going to try to give a boost to the economy to help reelect Joe Biden. And so the markets are already pricing in these interest rate cuts. But one of the comments that Powell made and that he stressed in the Q&A too is that the Fed wants to bring or is committed to bringing inflation down to 2% over time. Now, he doesn't say when, he just says over time, which, to me, well, how long? Someone should say, how long? How much time are you talking about, Chair Powell? Because we've already waited over 2 years, right? 2021 and 2022, the inflation rates were significantly above 2%. We're almost finished with 2023. So we're almost going to be 3 years where inflation is at least double 2% or more than double. So, I mean, that's a long time. Because remember, Powell was saying initially we want inflation to average 2%. Well, we've just had 3 years of way above 2%, right? So how are we ever going to get the average to be 2%? That means we'd have to have inflation way below 2%, which of course, that's never going to happen. So again, inflation averaging went out the window, right? That was the shortest policy goal in the history of the Fed because they had to abandon it quickly the minute they found themselves on the other side of 2%. By the margin they were. Of course, I said that was going to happen when Powell first outlined this BS policy of average inflation at 2%. But how many more years is it going to take? 1 more year, 2 more years, 3 more years? I mean, that would be 6 years of well above 2% inflation. I mean, that's doing a lot of damage to the economy, to the purchasing power of all Americans. And Powell doesn't give any clear timetable. He just says we want to get it there over time. How much time? We have no clue. And so, there's no urgency here. We're just, we're going to take our time. Now, the other thing he talked about, the problem, right? And there's only one problem that, he kind of acknowledged. The problem was the economy was too strong, right? That was the problem. No, he didn't say it was a problem. He went out of his way to say that we're glad that the economy is so robust and so strong. But the problem is because the economy has been so strong, we didn't think it was going to be this strong. So because we were surprised by how great this economy is, there's more work to be done here. So we may have to hike rates more than we thought. We may have to leave these rates higher, but it's all because of this great economy. So don't be upset that you have these high rates because it's for a good reason. It's because of this strong economy. He's not going to admit that the reason rates are going up is because of inflation. Right? It's inflation that's strong, not the economy. Right? Inflation is just making the economy look strong because they're looking at the GDP numbers, or again, they're looking at all these jobs that are being created because inflation has pushed up the cost of living so much that people need second and third jobs. So you have a lot of these jobs being created for people that already have 1 or 2 jobs. And it's padding the numbers. But again, remember, I've been going over this every single month where we get a beat on the jobs. The next month, they revise it lower. It was 7 times in a row or 8 times in a row, which again is not coincidence. The odds are too low that you would, toss a coin heads 7 times in a row. If it's not coming up tails a couple of times, there's something wrong with that coin. And what's going on here is the government is constantly overestimating the number of jobs that are being created because they're overly optimistic on the economy. They think it's stronger than it is, and so they think it creates more jobs than it does, and then when they realize they were wrong, they go back and they revise it, but the revisions don't make the headlines. What makes the headlines is, hey, we beat expectations. Well, then we find out a month later that we didn't, but now there's a new report that beats expectations that then also gets revised down the following month. Nobody focuses on the revisions. All the news stories are, hey, we have a great number and we beat expectations. So, all this talk about a strong labor market, a strong economy, it's really just talk. It's inflation that's strong, and Powell doesn't want to admit it.